Good evening, VV Nation. My name is Ryan and welcome to the channel. Now, in tonight's presentation, we are going to cover Microsoft and Google. They did just report earnings as of yesterday evening. I'm recording this video this morning just to give you an update. There are some mixed signals here. We do see Microsoft is up after hours and Google shares seem like they will gap down by the market open. Now, just to recap here, I do have two articles up going into Microsoft earnings and diving into Google's earnings itself. After these two articles, I am going to jump over to the VectorVest 7 software and see how these stocks match up against each other and see if they're even good buys right now. So if you want to learn more about the earnings results from Google and Microsoft itself, stick around and let's get started. All right, so I'm going to begin with Microsoft earnings. You can see with the article I have up in front of you right now, just by the title, stock soars as AI drives record revenue again. Now, a lot of us thought that the AI craze might be over, but Microsoft may not agree with that. Now let's go through this article and see what I found that is important and that you could utilize as an investor. So let's scroll down here. First thing, a lot of optimism based on the earnings here. Microsoft smashed expectations in its report this past Tuesday afternoon. In addition, the technology behemoth continues to cash in on the AI craze. Now let's scroll down. There's a couple more things I want to show you. A lot of good things about Microsoft shaping up here. Now they brought in $56.5 billion as total sales. Now their estimates were at $54.5 billion. So they did beat the sales estimates by $2 billion. In addition, this was 13% higher than the same period last year. So they are growing their sales year over year. Looks at this rate right now, about 13%. That's phenomenal growth for such a big company. In addition here, the top line growth also came in hotter than expected. Microsoft was at 2.99 earnings per share, smashed the estimates at 2.65 and top last quarters at 2.69. So this is growing. Now, this was the point here that a lot of investors got crazy and probably why it's up after hours. Since it's released its earnings, the robust earnings came as expansion in its heavily AI exposed intelligent cloud unit swelled to $24.3 billion, making it about 20% annual growth. Now, they were really smart. They combined the aspects of their cloud computing and AI, combined them together, and they're making money. That's the important thing. Now, something to share for you, going forward here as I scroll down, this I thought was very interesting here. Now, in addition to sharing further information on Microsoft AI's endeavors, the company's next earnings report will also first time feature results from Activision Blizzard. Now, Activision was acquired by Microsoft last month in a $69 billion deal. I'm excited to see how Activision affects their bottom line. Now, the stock itself performed really well over the past several years. They have a huge space in the computer gaming industry. So I'm excited to see how that result will come out in the next quarter earnings report. Now let's take a look at the earnings data coming out of Google. I just looked at it. It's now down almost 9%. The market just opened up. Still a lot of selling pressure on Google. So let's see exactly what's going on. Just from the title here, Alphabet shares drop as cloud miss overshadows better than expected overall result. So the first thing I do want to talk about here, look, Alphabet reported 11% revenue growth in the third quarter as a rebound in advertising pushed expansion into double digits for the first time in over a year. The shares dropped almost 7% in extended trading as the cloud business missed analyst estimates. So if we run the numbers here, earnings per share, it beat estimates 155 compared to 145. Revenue also beat 76.69 versus 75.97 billion. Advertisement beat. However, this is what we're going to focus on. Cloud revenue. The data came in at 8.41 billion compared to the estimate of 8.64 billion. That's almost $500 million short of what the analysts were expecting. So at no surprise, we see Microsoft being the big cloud winner as at least yesterday afternoon from the earnings report. Now, on a more positive note here, we do see that the YouTube Shorts, TikTok's competitor, now has 70 billion daily views, up from more than 50 billion daily views at the beginning of the year. Now, the revenue from advertising itself came in at 59.65 billion, up from 54.48 billion 1 year ago. I like looking at year over year because it looks at the longer trend of earnings. I love to see positive growth over year after year. So this is something that I'm actually pretty excited about. Now, the next thing here touches back on cloud revenue, came in below estimates at 8.41 billion, missing the mark by more than $20 million. Now, Alphabet's cloud has been a key area of investment as the company tries to catch Amazon Web Services and Microsoft Azure. Now, the business becoming even more important with the emergence of generative artificial intelligence because more companies are turning to public cloud to run hefty workloads. So at no surprise, we all know Amazon, Microsoft, and Google are in the cloud race right now. However, from this earnings report, it seems like Google might be losing that race, especially compared to the Microsoft earnings report that we just looked at. Now, here is a chart of growth compared year over year. We can see here since the fourth quarter of 2022, when there's only 1% annual growth, we are seeing that trajectory starting to move up again, ending this quarter at 11%. Now, even though the unit disappointed here, cloud still grew 22% from the prior year. So double rate expansion of the company as a whole. Now, this is what I found very interesting about this article. Google has great sales, great growth. However, the revenue just isn't quite there. Now, this article here states that much of Google's year so far has been highlighted by cutting cost. We can see here that it cut 12,000 jobs since the beginning of the year. So Google is taking major actions to cut costs where needed to increase the bottom line. So now that I've showed you both these articles here, we're seeing the positive and negatives from both companies, when we're also noticing that Microsoft tends to be winning the cloud race, at least when it comes compared to Google. So let's jump over to the VectorVest 7 system and see how these stocks match up. So now we're in the VectorVest 7 system here. This data is as of today, October 25th at 10:16 this morning. Now we do have Microsoft and Google here. We can see after the earnings report, Microsoft is up as of right now 3.72, giving up some of those gains from the market open. In addition, if we look at Alphabet here, down just over 8%. Now, if we look here, the first thing we want to do is find out which stock is a better value. Simply by doing that, we compare price to the value column. Value is just what we here at VectorVest feel that a company is worth. It's mostly based off earnings, interest rates, and inflation. Now, if we take a look here, Microsoft trading at $342 right now, we value at $209, so greatly overvalued. Now, if we take a look at Google here, one of the few big tech companies that is fairly valued. If we take a look in price action is at 127.29. We value it currently just over $123. So it is slightly overvalued, but pretty much fairly valued when it comes to this position. Now, in addition, if we take a look at RV, this looks at long-term price appreciation potential compared to an alternative investment in a AAA corporate bond. Now, they do match up pretty evenly here. Microsoft with a rating at 1.00 and Google at a rating of 1.05. If you notice here, RV to RT, even VST, these are on a scale of 0 to 2. They are an oscillator, so above 1 is a favorable rating, below 1 is an unfavorable rating. So right now, if we look at Microsoft coming in at 1.00, that's a neutral rating, and Alphabet not much better at 1.05, so slightly favorable. Now, next we have RS, or relative safety. You know, at no big surprise, these being the tech behemoths that they are, they have great safety ratings. So they have great, consistent, and predictable earnings reports. Their ratings come in quite evenly right now. Microsoft does at 1.44, while Google does take the charge at 1.45. Now, one thing I do like here about Microsoft in particular is look at its RT, relative timing. The short-term price trend of this company is still up. So even if the market is pulling back, we have a company that is trending up and making money. In addition, it does have the buy rating. Google at the moment right now has an RT below 1 at 0.84. Thus, we know that this company is trending down and has a hold rating right now. So it kind of justifies itself that Microsoft right now is the clear winner. Now, if we take a look at GRT, this is the company's ability to grow its earnings. We see that Microsoft has an 11% growth rate in earnings, while Google only has 8%. So just by looking at the proprietary indicators here and the VectorVest 7 system, I would say Microsoft does take the charge, solely because it currently is in an upward price trend right now with the buy rating and a higher growth rate in earnings. However, one thing I really do like about Google, and I'm not saying sleep on the stock at all, but look at the valuation. This company is actually fairly valued. So this could be a good bottom fishing opportunity. Now, I hope you got some great insight on both of these stocks here. Now, I will say one thing. I do not advocate buying any stocks at this time. It says it right on the homepage of our program. We just got 3 fresh red lights as of today. So if I was going to be bullish on either one of these positions, it would be Microsoft just because the RT is above 1 and it is still in an uptrend. Now, don't sleep on Google. As I mentioned before, the valuation is almost a fairly valuation, so that could actually be a great bottom fishing opportunity if we can get some green lights in the color guard. Now, I hope you found this video informative. And in addition, if you do like seeing this content, please hit the bell icon so you get notifications going forward. And don't forget the like and subscribe buttons. Thank you. Have a good night.
Hey, VV Nation. One of the most important books that I've ever read in regards to the stock market was written by our founder, Dr. Bart Delito, the founder of VectorVest. The name of the book is called Stock Strategies and Common Sense. It will give you everything that you need to know about how the market works, the cycles, how to value stocks, and it's very well presented so that you can better understand and get a better understanding of how the market works. Folks, you simply need to go to www.vectorvest.com/YT book to get your free edition of Stock Strategies and Common Sense. Folks, you want to do that right now.
Yeah.